I am Jesse Livermore, the man Wall Street called the boy plunger. At just 14 years old, I began posting stock quotes at a Boston brokerage, and by 15, I'd made my first $1,000 trading. What I discovered about market movements would eventually make me one of the greatest traders in history, worth over $100 million in today's money. I'll teach you how I decoded market patterns to anticipate price movements decades before computers and algorithms existed. My approach wasn't based on tips or rumors. I learned that lesson the hard way. In 1907, I made $3 million shorting the market during the panic. But in 1908, I lost it all following bad advice. The market taught me a brutal lesson I never forgot. Trust your own analysis, not the whispers of others. I developed what I called tape reading, the ability to detect the true direction of the market by observing price and volume patterns. When I saw large blocks of shares being accumulated with minimal price movement, I recognized smart money positioning before a major move. This wasn't guesswork. It was scientific observation of market behavior. Let me share what I discovered about market movements. First, markets move in trends, and these trends persist until definitive signals indicate reversal. I made millions by identifying the primary direction and riding it without questioning why. The market doesn't care about your opinion. It only respects your ability to recognize its direction. In 1929, I anticipated the Great Crash not through economic theories, but by observing distribution patterns, heavy selling disguised as strength. While others saw prosperity, I saw the smart money quietly exiting. I shorted the market and made $100 million in today's dollars during the collapse. My method wasn't complex. I simply trusted what the market was telling me through its action. I developed pivot point theory long before it became standard. When a stock failed to break through a previous high after multiple attempts, I recognized resistance. When it broke through after consolidation, I knew the path of least resistance had changed. These pivot points became my triggers for entry and exit. The most important discovery I made wasn't about technical patterns, but psychological discipline. I realized that knowing what to do was useless without the discipline to execute. My biggest losses came not from misreading the market, but from breaking my own rules. I'd watch a stock for weeks, waiting for the perfect entry, and then sabotage myself with impatience or doubt. Here's what I promise to teach you. Not just how to read market movements, but how to master yourself. The market will test your conviction repeatedly. It will tempt you to abandon sound principles for quick profits. It will punish your weaknesses mercilessly. But if you apply what I've learned through decades of trading, millions made and lost, you'll develop the rare ability to see what others cannot, the true path of market movements before they become obvious to the crowd. I am Jesse Livermore, and I've made and lost more fortunes than most traders will ever see in their lifetimes. The market has been my battlefield for decades, and I've extracted over $100 million from it when that sum meant something entirely different than it does today. I want to teach you the first and most fundamental secret that separated me from the amateurs: the price-volume relationship. Let me be clear. Most traders are looking at price alone, and that's precisely why they fail. I discovered early in my career that price movement without corresponding volume is meaningless. It's like watching a boxer throw a punch without seeing the force behind it. When I see a stock rising on increasing volume, I know there's genuine conviction behind the move. When I see it rising on declining volume, I recognize the deception. In 1907, while most investors panicked during the market crash, I made my first million by observing this relationship. The market had been declining for weeks, but I noticed something critical. The volume on down days was diminishing. Most traders missed this signal entirely. They saw only the falling prices and ran for the exits. I saw the weakening conviction behind the selling pressure. I entered my positions when prices were still declining, but volume had significantly decreased. This told me the selling exhaustion was near. When Union Pacific began to stabilize while volume increased on up days, I knew my analysis was correct. I pyramided my position aggressively, adding contracts as the price confirmed my thesis. The result? I walked away with over $1 million while others lost everything. Here's exactly how I apply this principle. I never trust a breakout unless it's accompanied by a significant increase in volume. Volume must confirm price. During my years of trading, I've watched countless rallies fail because while the price looked promising, the volume told the true story. There wasn't enough conviction to sustain the move. I developed a specific method to quantify this relationship. When I see a stock rise 3% or more, I expect volume to increase by at least 50% above its 10-day average. Anything less signals weakness. Conversely, when I see a stock decline but volume fails to expand, I recognize a potential buying opportunity forming. Remember the 1929 crash? I made $100 million because I observed that market advances were occurring on progressively lower volume for months before the collapse. The smart money was quietly exiting, while the public was blindly buying. Volume was telling the real story, while price was lying. I've taught this principle to a few select traders over the years. Those who truly grasped it never looked at charts the same way again. They understood that volume is the force behind price movement. It's the commitment, the conviction, the truth behind what otherwise would just be lines on a chart. Master this relationship, and you'll already be ahead of 90% of market participants. They chase price, I follow volume. They react, I anticipate, they hope, I know. This isn't just theory. It's the cornerstone of how I extracted millions from the market when most others were being destroyed by it. I am Jesse Livermore, and I made and lost more fortunes than most traders will ever see in their lifetime. My greatest edge? Pivot points. Those critical moments when the market reveals its true direction. I'll show you exactly how I identified these reversal points to amass over $100 million in today's dollars, and how I repeatedly rebuilt my fortune after devastating losses. When I started as a board boy at Payne Weber at just 14 years old, I noticed something that would become the foundation of my trading. Prices don't move in straight lines. They pivot at critical junctures. I developed a system to identify these pivot points decades before they became common trading terminology. My pivot point strategy is deceptively simple but extraordinarily powerful. I look for what I call testing points. When a stock or commodity tests a previous high or low multiple times. The market's reaction at these points tells me everything I need to know about underlying strength or weakness. I don't rely on newspaper opinions or broker advice. I watch price action. When a stock tests a previous high 3 times and fails to break through, I prepare for a reversal. Similarly, When a stock tests a low multiple times but refuses to go lower, I recognize accumulation is happening beneath the surface. In 1907, I made my first million during the market crash by identifying pivot points in Union Pacific. While others panicked, I watched as the stock tested lower levels but showed decreasing selling pressure. This wasn't random luck. It was the culmination of years observing how stocks behave at critical junctures. My technique requires patience. I often sit for days, sometimes weeks, watching a stock test and retest levels. In 1929, before the Great Crash, I observed the market repeatedly failing to make new highs with the same momentum. Each push upward showed diminishing strength, a classic pivot signal that told me the bull market was exhausted. I don't use complicated formulas or fancy charts. My system is based on observation and price memory. Markets remember their important levels, and so do I. When cotton hit $35 in 1919, I knew it would either break through decisively or reverse dramatically. When it failed on the third attempt, I went short with everything I had. The result? One of my greatest trades ever. Here's what most traders miss. Pivot points aren't just about price levels. They're about the character of the market at those levels. I watch volume, the speed of the move, and most importantly, how the market behaves after testing a critical point. Does it retreat quickly or hold firm? Does volume expand or contract? These nuances tell me what the big money is doing. The pivot point. Strategy made me millions because it forced me to trade with the primary trend while identifying the exact moment that trend changed. This is how I survived multiple market cycles when others were wiped out. Master pivot points, and you master the market's rhythm, the very pulse of price movement. This isn't theory. This is how I built and rebuilt my fortune multiple times over decades of trading. I am Jesse Livermore, and I've made and lost more fortunes than most traders will ever see in a lifetime. When I tell you the tape never lies, I'm sharing the most valuable lesson I've learned across decades in the markets. This isn't theory. It's what made me millions in the crash of 1907 and again in 1929 when I shorted the market before Black Tuesday and walked away with $100 million in today's money. The market tells a story through price action, what I call the tape. And that story reveals the psychological state of every participant. I've spent my life learning to read this language, and today I'm going to teach you how I do it. When I started as a quotation board boy in Boston bucket shops at 14, I noticed something crucial. Prices move before news becomes public. The tape shows the truth before the newspapers print it. By the time you read about it, smart money has already acted. Here's exactly how I read market psychology through price action. First, I watch for divergence between price and volume. When a stock rises on decreasing volume, I become suspicious. I've seen this pattern precede nearly every major top in my career. The market is telling you that conviction is waning. Buyers are exhausted. Second, I pay attention to how stocks react to news. In 1929, I noticed something critical. Good news was being sold. Companies would report positive earnings, yet their stocks would drop. The tape was telling me the market was saturated. Everyone who wanted to buy had already bought. That's when I began my heavy short positions before the crash. I don't listen to opinions. I don't read analyst reports. I've made that mistake and paid dearly for it. In 1908, I went bankrupt after ignoring the tape and listening to tips. The tape was showing weakness while experts remained bullish. I learned my lesson. The market's action is the only truth. Third, I study sector rotation. When money flows from one sector to another, it tells me where the smart money is positioning. Before the 1929 crash, I noticed capital fleeing speculative stocks and moving toward defensive positions. The professionals were preparing for disaster while the public remained oblivious. Remember this. The market is never wrong. Opinions are. When I've lost money, it wasn't because the market was incorrect. It was because I misinterpreted what it was telling me. The tape speaks a subtle language of fear and greed. Learn to read it, and you'll see the future before others. I've developed this skill through painful losses and spectacular wins. In 1923, I spotted unusual strength in wheat futures despite bearish fundamentals. The tape was telling me something that analysts couldn't see. I bought heavily and made millions when drought news finally became public. The tape never lies, but your interpretation can. That's why I developed my testing method, starting with small positions to confirm my reading before committing serious capital. The market will tell you if you're right or wrong. Listen to it, not to me or anyone else. I am Jesse Livermore, and I've made and lost more fortunes than most traders will see in 10 lifetimes. When I tell you about detecting market pivots through tape speed, I'm not sharing some academic theory. I'm giving you the exact method that made me millions in the crash of 1907 and again in 1929. What separates me from the amateurs is my ability to read the market's pulse through the speed of the ticker tape, a skill that turned me from a 5 cent a week quotation boy into the most feared speculator on Wall Street. The tape tells all, if you know how to listen. I discovered early in my career that the speed at which prices changed revealed more about market sentiment than any broker's tip or newspaper headline. When I see the tape accelerating, prices coming in faster than the ticker can print them, I know something fundamental is changing in market psychology. This acceleration is the market's heartbeat quickening before a major move. Let me be absolutely clear about my method. I watch for clustering of transactions and increasing velocity of price movements. When Union Pacific starts trading with unusual frequency and the quotes can barely keep up, I don't need to know why. I only need to recognize that smart money is moving. The why becomes obvious later, but by then, I've already established my position. I remember in October 1907, when the market was already weak, I noticed the tape falling behind by nearly an hour. Stocks were being liquidated faster than the ticker could report. While others panicked about the delay, I recognized the significance. This wasn't a technical problem. This was wholesale liquidation. I shorted heavily and made my first million when the market collapsed. My strategy requires patience and discipline. I don't act on the first sign of increased activity. Instead, I confirm the signal by watching key stocks across different sectors. If steel, railroads, and banking stocks all show increased trading velocity simultaneously, that's when I make my move. One stock moving fast might be manipulation. Multiple sectors moving together is the market speaking. The beauty of tape reading is its purity. Newspapers lie, company reports lie, even your broker lies. But the tape cannot lie. It shows you exactly what people are willing to pay at this moment. No opinions, just facts. When I see prices accelerating downward with increasing volume, I know fear has taken hold. When prices rise with increasing speed, Greed is driving the market. I've developed a specific rhythm to my trading based on tape speed. I start with small positions when I first detect unusual activity. If the tape confirms my suspicion by continuing to accelerate, I pyramid my position, adding with each confirmation. This method kept me from ruin many times when my initial read was wrong. Remember this: the market pivots before the news becomes public. By the time you read about it in the papers, the real money has already been made. That's why I focus on the tape speed rather than the day's headlines. The tape shows what is happening. Everything else is just someone's opinion about what might happen. I am Jesse Livermore, the man who made and lost several fortunes in the early 20th century markets. When I say I understand the market's pulse, it's not theory. I've extracted over $100 million from the markets in today's dollars, and I've also lost it all, twice. The secret I'm about to share with you, my line of least resistance strategy, is what rebuilt my fortune after my darkest moments. This isn't something you'll find in textbooks. It's what separated me from the thousands who went broke in 1907 and 1929 when I made millions. My line of least resistance strategy is deceptively simple but profoundly powerful. I discovered it after losing my first fortune and realizing that fighting the market's natural direction was financial suicide. The market always moves along the path of least resistance, like water flowing downhill. My job, and yours, is not to predict where it should go, but to identify where it's already going. Here's exactly how I apply it. I never enter a position until I confirm the line of least resistance. When a stock makes a new high after consolidation, I don't ask why. I buy. When it makes a new low after support breaks, I sell or short. I don't care about the news, the earnings, or what some banker says at lunch. The action of the market itself tells me everything I need to know. In 1907, while others were paralyzed by the banking panic, I observed the market's behavior, not the headlines. I saw weakness in Union Pacific before the crash. The stock struggled to advance despite positive news, a clear sign the line of least resistance had changed to downward. I went short heavily and made $3 million in a single day when the market collapsed. I don't try to catch the first eighth of a move, and I don't stay until the last eighth. The meat of the move, the middle 80%. That's where I make my money. That's where the line of least resistance is clearest, and the profits most reliable. The most common mistake I see traders make is fighting the line of least resistance. They buy falling stocks because they seem cheap, or they short rising stocks because they seem expensive. I never average down on a losing position. That's adding money to the wrong side of the line of resistance. When I'm wrong, I exit. Immediately, I've found that markets reveal their direction through their reaction to news. When good news can't lift a stock, the line of least resistance is down. When bad news can't sink it, the line is up. I made millions in 1929 because I noticed stocks barely responding to positive developments. A clear signal the line of resistance had shifted. My strategy requires patience. Sometimes I sit for months without trading, just watching. Most can't do this. They feel compelled to act, to do something. This impatience is why they lose. I wait until the line of least resistance becomes obvious. Then I act with size and conviction. Remember, the market will tell you its intentions if you listen closely enough. Don't predict, observe, don't hope, confirm. The line of least resistance strategy isn't just how I trade, it's how I survived when others didn't. I am Jesse Livermore, the man who made and lost more fortunes than most will ever dream of seeing. My pivotal point trading system is what separated me from the amateurs who constantly bleed money into Wall Street's coffers. When I developed this system in the early 1900s, it changed everything for me, allowing me to make millions when others were losing everything in the crashes of 1907 and 1929. Let me teach you exactly how my pivotal point system works, because understanding this could be the difference between your success and failure in the markets. Pivotal points are specific price levels where the market reveals its true intentions. I discovered these aren't just random numbers. They're psychological battlegrounds where buyers and sellers clash most intensely. When a stock breaks through a pivotal point with increased volume, I know immediately that something significant is happening. I learned this lesson the hard way in 1906 when I ignored a pivotal breakout in Union Pacific. The stock surged 60 points afterward, and I missed millions because I failed to act on my own system. I never made that mistake again. Here's what I look for. First, I identify stocks that have been consolidating for weeks or months. The longer the consolidation, the more powerful the eventual breakout will be. I carefully mark the upper and lower boundaries of this trading range. These become my pivotal points. When price finally breaks above the upper boundary with conviction, I buy immediately. If it breaks below the lower boundary, I sell or short. The beauty of this system is its clarity. There's no ambiguity, no second guessing. The market tells me exactly what to do. In 1929, I made $100 million shorting the market because I recognized a downside pivotal point break that signaled the entire market structure was collapsing. While others were buying the dips, hoping for recovery, I was adding to my short positions. My pivotal point system told me the truth when everyone else was in denial. I don't predict market moves. Predictions are for fools. I react to what the market is actually doing at these critical junctures. When a stock breaks a pivotal point after a long consolidation, it's like a spring that's been compressed for months, suddenly releasing its energy. The most important element of my system is patience. I wait quietly, sometimes for months, until the stock reaches its pivotal point. Most traders can't do this. They need constant action, constant trading. That's why they lose. Remember this, the money is made in the waiting, not in the trading. I've sat for weeks doing nothing but watching, waiting for these pivotal points to appear. When they finally do, I strike with everything I have. This discipline is what allowed me to turn $10,000 into $10 million multiple times throughout my career. My pivotal point system isn't complicated, but it requires iron discipline and perfect execution. Master this, and you'll have something more valuable than gold. You'll have a genuine edge in markets that destroy most who enter them. I am Jesse Livermore, the man who made and lost fortunes multiple times over, earning me the title of the greatest trader who ever lived. My fourth secret, the money-making confirmation technique, is what separated me from the amateurs who constantly bleed money in the markets. This isn't theory. It's the exact methodology that allowed me to take $3 million from the 1907 crash and $100 million from the 1929 crash when others lost everything. When I first started trading, I made the same mistake most of you are making right now, jumping into positions based on gut feelings or tips. I learned through painful losses that the market gives specific signals before major moves, and I developed a confirmation system that transformed my trading forever. Here's exactly how my confirmation technique works. I never enter a position until I receive multiple independent signals all pointing in the same direction. I call these market witnesses, each one confirming the others. When 3 or more witnesses align, the probability of success increases dramatically. My first witness is always price action. I watch for stocks making new highs or lows. The second witness is volume. Increasing volume confirms the move has strength behind it. My third witness is what I call sympathetic movement, when related stocks or sectors move in harmony. My fourth witness is timing, certain seasonal or cyclical patterns that increase probability. Let me give you a concrete example from my own trading. In 1907, before the market crash, I noticed banking stocks making lower highs. That was witness 1. Then I saw trading volume increasing on down days but decreasing on up days. Witness 2. Next, I observed transportation stocks weakening in tandem with financials. Witness 3. Finally, credit markets were tightening. Witness 4. With all 4 witnesses aligned, I took a massive short position that made me millions, while others were ruined. The power of my confirmation technique is that it keeps you out of bad trades. Most traders lose money because they act on insufficient evidence. I wait. I watch. I gather my witnesses. Only when they all testify to the same verdict do I commit my capital. This patience is why I survived multiple market cycles when others were wiped out. I've noticed that most traders are desperate to be in the market. This desperation clouds judgment. My confirmation technique forces discipline. There were many times I watched potential opportunities pass by because my witnesses didn't align. This restraint saved me millions. Remember this, the market will always be there. Another opportunity will always come. But your capital, once lost, may never return. My confirmation technique isn't about catching every move. It's about catching the significant moves with overwhelming probability in your favor. What I'm teaching you took me decades and millions in losses to learn. Apply my confirmation technique, and you'll immediately separate yourself from 95% of traders who are merely donating their money to the market. I am Jesse Livermore, and I've made and lost more fortunes than most traders will ever see in their lifetime. My peak net worth would be worth billions in today's money, all built through my understanding of market psychology and price action. Today, I'm going to share with you my most powerful secret, the pivotal points method. This isn't theory. It's what made me the greatest trader of my era and what can transform your approach to the markets forever. When I first started trading, I was like everyone else, chasing tips, following the crowd, and getting slaughtered. I lost my entire stake 3 separate times before I was 30. The market taught me brutal lessons that I paid for with real pain. But through those failures, I discovered something that changed everything. I realized the market moves in pivotal points, critical price levels where the entire character of a stock or commodity changes. These aren't arbitrary support and resistance levels that amateurs draw on charts. I'm talking about genuine psychological inflection points where smart money makes its most important decisions. Here's exactly how my pivotal points method works. I identify key price levels where a security has repeatedly reversed or accelerated. When price approaches these levels, I don't act immediately. This is where most traders fail. They jump the gun. I wait for confirmation. I need to see the market reveal its hand. When a stock breaks through a pivotal point with increased volume, I don't hesitate. I commit significant capital. My rule is simple. The violation of a pivotal point is where the real money is made. In 1907, I made $3 million, equivalent to about $86 million today, in a single day by recognizing a pivotal breakdown in Union Pacific during the panic. Most traders overcomplicate this business. They drown in indicators and conflicting opinions. I stripped everything away until only the essential truth remained. Price action at key levels tells you everything. The market telegraphs its intentions if you know how to read it. I've found that pivotal points work across all time frames and all markets. Whether I was trading cotton in the 1920s or stocks in the crash of 1929, the same principles applied. The market is nothing but a voting machine in the short term, reflecting human psychology that hasn't changed in centuries. My method requires extreme patience. I might sit for weeks doing nothing, waiting for setups at these pivotal levels. Most can't handle this inactivity. They feel compelled to trade to justify their existence as traders. I made my largest profits by trading less frequently, but with absolute conviction when pivotal points were violated. Remember this. The big money isn't made in the buying and selling. The big money is made in the waiting. Wait for prices to reach a pivotal point. Confirm the breakout or breakdown, then act with size and conviction. That's how I built my fortune, and that's how you'll build yours if you have the discipline to follow my method. I am Jesse Livermore, the man who made and lost several fortunes in the early 20th century markets. When I talk about trading techniques, I'm not sharing theories. I'm giving you battle-tested strategies that made me millions in an era without computers or real-time data. My volume confirmation technique is perhaps the most powerful weapon in my arsenal. And today I'll teach you exactly how I use it. Volume is the lifeblood of price movement. I discovered early in my career that price movement without corresponding volume is like a car without gas. It simply won't go far. When I see a stock breaking out of a pattern, the first thing I check isn't the percentage gain. It's the volume behind that move. I need to see at least 3 times the average daily volume on a breakout, or I don't trust it. Period. Let me explain how I apply this in real trading scenarios. In 1907, I made one of my greatest killings during the panic. While everyone focused on the collapsing prices, I watched volume patterns. I noticed certain stocks were being sold with increasing volume on each down day. This told me the selling pressure was intensifying, not abating. I shorted Union Pacific heavily and wrote it down for a $3 million profit, equivalent to over $80 million today. My technique has 3 specific components. First, I established the normal volume baseline by calculating the average daily volume over the previous 20 trading days. Second, I watch for divergences, when price moves in one direction, but volume doesn't confirm. Third, I look for volume climaxes, extraordinary spikes that often signal exhaustion and imminent reversal. I never, and I mean never, enter a position without volume confirmation. In 1929, before the crash, I observed that market advances were occurring on progressively lower volume. This volume divergence was my warning sign. The public was being drawn in by rising prices, but the smart money was quietly exiting. I sold everything and went short, making $100 million in today's dollars during the crash. Here's my practical application. When I see a stock breaking through resistance, I don't just buy immediately. I wait for confirmation. If volume doesn't expand dramatically as the price breaks through, I stay out. It's a false breakout waiting to trap amateurs. I've saved myself from countless losses with this one rule alone. Remember this: volume precedes price. Always. When I see heavy volume before a price movement, I know something significant is coming. The big players can't hide their footprints when they're accumulating or distributing millions of shares. By the time the price moves, it's often too late. But the volume patterns gave advance warning to those who were paying attention. This isn't complicated, but it requires discipline. Most traders get seduced by price action and forget to verify with volume. I made this mistake early in my career and paid dearly for it. Now, volume confirmation is my non-negotiable requirement for every single trade I make. I am Jesse Livermore, and I've made and lost more fortunes than most traders will ever see in a lifetime. I've taken $100 and turned it into $50 million, and I've lost it all more than once. The market has been my master, my mistress, and occasionally my servant when I follow my own rules. Today, I'm going to reveal one of my most powerful trading concepts, the line of least resistance. When I was still a young man trading in bucket shops, I noticed something that changed everything for me. Markets move along paths of minimal opposition, what I call the line of least resistance. This isn't some mystical concept. It's the fundamental nature of price action. Let me explain exactly what I mean. When a stock or commodity shows a clear directional bias, it will continue in that direction until something significant forces it to change course. I don't fight this momentum. I align myself with it. When I see a stock breaking to new highs with increasing volume, I don't question it or try to short it because it seems overvalued. I buy it. In 1907, I made my first million by following this principle. While the market was crashing, I observed the line of least resistance was clearly downward. I shorted Union Pacific and other railroad stocks aggressively. Most traders were trying to catch the bottom, fighting against the tide. I simply aligned myself with the market's clear direction. The result? I walked away with $1 million while others were wiped out. The mistake most traders make is thinking they're smarter than the market. They aren't. Neither am I. The difference is I know it. When cotton prices started climbing in 1919, I didn't question why. I simply recognized the upward line of least resistance and rode it. I pyramided my position as prices rose, eventually controlling over 156,000 bales. My profits were astronomical. Here's the practical application. I wait for the market to show me its hand. When prices break through significant resistance with volume, the path of least resistance has revealed itself. I enter in the direction of the breakout and add to my position as the trend confirms itself. I never average down or fight the tape. I've learned this lesson through painful experience. In 1908, I lost nearly everything fighting an uptrend in wheat because I thought it was overvalued. The market doesn't care what I think is fair value. It cares only about supply and demand at this moment. My trading journal became my greatest ally in identifying these lines of least resistance. I meticulously recorded price action, noting when stocks moved with authority and when they struggled. Patterns emerged that I couldn't see in the heat of battle. This objective record kept me honest. Remember this: The successful trader doesn't hope, guess, or pray. He observes, confirms, and acts decisively when the line of least resistance becomes clear. The market will tell you everything you need to know if you're willing to listen. I've made millions by simply following this principle. You can too, if you have the discipline to follow what the market is clearly showing you. I am Jesse Livermore, and I made and lost more fortunes than most traders will ever see in a lifetime. My probing technique is what separated me from the amateurs. It's how I turned $10,000 into $10 million during the 1929 crash while others jumped from windows. Today, I'll teach you this exact method that kept me alive through the most volatile markets in history. The probing technique is my strategic approach to testing market strength without risking significant capital. I developed it after losing my entire fortune, twice, when I went all in too quickly. The market taught me harsh lessons that I paid for with millions. You can learn from my pain instead of your own. Here's precisely how I probe the market. I initiate a small position, what I call a pilot fish, to test my thesis before committing serious capital. I'm not guessing. I'm gathering information from the market itself. When I shorted Union Pacific in 1907, I didn't immediately deploy my full position. I started with 1,000 shares, observed the reaction, then added 5,000 more when the stock confirmed my thesis by breaking support. My probing technique follows 3 strict rules I never violate. First, my initial position must be small enough that I can be completely wrong without damage to my capital base. Second, I only increase position size when the market confirms my thesis through price action. Third, I abandon the trade immediately if the probe reveals contrary information, regardless of my conviction. This isn't mere caution. It's strategic intelligence gathering. I'm asking the market a question with my probe, then listening carefully to its answer. When I correctly anticipated the 1929 crash, I first probed with small, short positions in overextended steel stocks. The market's inability to mount meaningful rallies told me everything I needed to know. I then pyramided my position as each new leg down confirmed my thesis. What separates my approach from gambling is that I'm not predicting. I'm reacting to what the market tells me. During the Northern Pacific Corner in 1901, I initially probed the long side, when my small position immediately went against me with unusual force. I didn't stubbornly hold. I recognized the information value of that probe, reversed course, and shorted aggressively, making millions in the subsequent collapse. The psychological advantage is immeasurable. By starting small, I removed the paralyzing fear of being wrong that causes most traders to freeze or act irrationally. My probes allow me to be wrong repeatedly with minimal damage, giving me the freedom to find the truly profitable opportunities. Remember this. The market will always tell you what it wants to do if you listen carefully enough. My probing technique isn't about predicting. It's about having a disciplined conversation with the market. Start small. Listen to the response. Then act decisively when the market reveals its hand. This approach saved me from ruin more times than I can count. Master it, and you'll survive when others don't. I am Jesse Livermore, and what I'm about to share with you transformed my trading from sporadic wins to consistent profits. My pivot point technique isn't taught in trading books. It's what I developed through decades of hard-fought market battles and millions won and lost. When I discovered this method in 1907, it changed everything about how I approach the markets. The pivot point technique is deceptively simple, yet most traders will never grasp its power. I look for those critical moments when market sentiment shifts, not when everyone else notices, but in the early stages when the smart money begins positioning. Let me be clear. This isn't about predicting tops and bottoms. I've never met anyone who could consistently do that, myself included. When I was building my fortune, I noticed something crucial about market movements. Before any significant trend reversal, the market gives specific signals, what I call pivot points. These are moments when price action contradicts prevailing sentiment. I don't fight the trend. I wait for the market to tell me when it's exhausted. Here's exactly how I execute this technique. First, I identify the dominant trend using weekly and monthly charts. I never trade against this primary direction until I see clear evidence of exhaustion. When the market makes a new high but momentum indicators fail to confirm, that's my first alert. But I don't act yet. I wait for a specific price pattern, a failure to make a new high followed by a break of the previous swing low. This is critical. In the 1929 crash, I noticed this pattern forming months before the collapse. While others were still buying, I was preparing to short. This single observation made me millions when the market finally broke. The technique requires patience, something most traders lack. I've sat for weeks, sometimes months, waiting for the perfect pivot point. During the Northern Pacific Corner in 1901, I watched as everyone scrambled to buy or sell based on rumors. I waited until I saw my pivot signal, when the stock failed to make a new high after 3 attempts. I shorted heavily and walked away with over $250,000. My discipline with this technique saved me countless times. During the panic of 1907, when Union Pacific dropped from 195 to 100, I wasn't caught by surprise. I'd already observed my pivot point signal, the stock making lower highs on increasing volume, and had liquidated my position weeks earlier. Remember this. The market will give you signals if you train yourself to see them. Most traders are too busy following the crowd to notice. I made my millions by watching these pivot points with religious dedication. The market doesn't reward those who follow. It rewards those who see what others don't. I've paid millions in tuition to the market to learn these lessons. You now have the blueprint for my pivot point technique. Use it wisely, because while the markets change, human nature, fear, and greed remains constant. That's why this technique has worked for me across multiple market cycles and will continue to work for those disciplined enough to apply it. I am Jesse Livermore, the man who made and lost more fortunes than most will ever dream of seeing. In 1929, I made $100 million shorting the market crash. That's billions in today's money. I didn't achieve this through luck or insider knowledge. I achieved it through psychological discipline, the very edge I'm going to teach you today. The market is not a place for the emotionally undisciplined. I've watched countless men enter the market with brilliant minds and deep pockets, only to leave broken and bankrupt. Why? Because they lack the psychological foundation that I built over decades of trading. My greatest discovery wasn't a chart pattern or indicator. It was understanding that the market is a mirror reflecting human psychology. When I finally accepted that my own emotions were my greatest liability, I began to truly profit. This realization cost me 3 fortunes before it finally stuck. I developed what I call my sitting tight principle. When I identify a major market move brewing, I establish my position. And then, this is crucial, I sit tight. I don't fidget. I don't second guess. I don't add to my position prematurely. I sit and let the market come to me. This discipline allowed me to ride the 1907 panic and the 1929 crash to massive profits while others panic. Let me tell you something most traders never learn. Patience isn't passive. It's an aggressive act of discipline. I've made more money sitting still than I ever made being active. During the 1929 crash, I held my shorts for months while everyone around me was buying the dips, convinced the bull market would resume. My patience paid off to the tune of $100 million because I trusted my analysis and refused to be swayed by market noise or popular opinion. The psychological edge I developed comes down to 3 principles I live by. First, I never argue with the market. When I'm wrong, I admit it immediately and cut my losses. Second, I wait for the market to confirm my judgment before I commit significant capital. Third, I size my positions based on my conviction level, not on how much I want to make. In 1907, I watched as Union Pacific began to weaken while the broader market held firm. I sensed something was wrong and established a short position. As the stock continued to drop, I added to my position, not because I was greedy, but because the market was confirming my analysis. When the panic hit, I was perfectly positioned. My psychological discipline allowed me to see what others couldn't and to act decisively when others froze. Most traders focus on entry points, but I learned that managing my mind determines my profits. The moments I've lost the most money weren't when my analysis was wrong. They were when my psychology failed me. When I've been at my best, maintaining iron discipline and emotional control, that's when I've made the millions that earned me the title Boy Plunger, and later, the Great Bear of Wall Street. Remember this: the market will test your conviction in ways you cannot imagine. Your edge isn't your strategy. It's your ability to execute that strategy with unwavering discipline when everything inside you screams to do otherwise. I am Jesse Livermore, the man who made and lost several fortunes in the early 20th century markets. My methods have stood the test of time because they're built on human nature, which never changes. I've extracted millions from the market, turned $10,000 into $10 million, and lost it all more than once. My painful lessons are your opportunity. When I look at today's markets, with their algorithms, high-frequency trading, and retail investors glued to smartphones, I see the same patterns I exploited a century ago. The technology changes. Human psychology doesn't. Let me be clear. My approach isn't about predicting the future. I never attempt to forecast where markets are heading. Instead, I wait for the market to confirm its direction. I follow price action, not opinions or news. When I was making my largest fortunes, I didn't care what the newspapers said. I cared what the ticker tape told me. My core principle remains applicable today. The trend is your friend. I made my greatest profits not from quick trades, but from sitting in strong trends for extended periods. In 1907, I made $3 million shorting the market crash because I recognized the downtrend early and had the discipline to stay with it. Today's traders are distracted by noise, social media alerts, breaking news, and constant commentary. I eliminated all distractions. I built a custom office with soundproofing so I could focus solely on price action. Your equivalent might be turning off notifications and focusing on your charts. My method requires patience, something rare in today's instant gratification world. I often waited weeks or months for the right setup. When Union Pacific showed weakness in 1906, I waited patiently before establishing my position. That patience turned into $1 million profit. I don't trade often. Most traders overtrade. I undertrade deliberately. I wait for what I call pivotal points, key market junctures where the odds heavily favor one direction. In today's terms, these are major support or resistance levels, trend line breaks, or pattern completions. My losses taught me more than my wins. I lost everything multiple times because I broke my own rules. Remember this: the market will teach you lessons, and the tuition can be expensive. I paid millions for mine. Money management saved me after each failure. Never risk more than 10% of your capital on any trade. I learned this the hard way. When I followed this rule, I could weather drawdowns. When I broke it, I was ruined. The modern trader has advantages I never had: instant execution, minimal slippage, powerful analytical tools. But these advantages mean nothing without the psychological discipline I developed. Technology doesn't eliminate the need for patience and emotional control. It makes them more critical than ever. Apply my methods to today's markets by focusing on the big trends, ignoring the noise, waiting for pivotal points, and managing your risk religiously. The market hasn't changed in its essence since my day, and neither has the path to trading success.